Let's talk about wheat also. 2020 hard red winter wheat markets. Um, you know, uh, when we were quote panicking about food demand, and at least in Colby, Kansas, it was toilet paper and bread, and a fair amount of things from the meat counter that you couldn't get hold of. So we had a period of pretty strong domestic milling demand for wheat, and it was one way to say it is U.S. consumers' risk-averse response to the COVID-19 disease that was going about. So as the pandemic it continues, again, we're getting more used to figuring out how to manage it, and that's all for the good. Still, if we have surges in worry, and that could still come, you'd have millers motivated to make sure there's adequate supplies in the store. So it's been a positive thing for domestic domestic flour milling. U.S. 2020 U.S. planting prospects. Basically, that also came out in that end of March report. 30.775 million acres, note down from the last 2 years. Spring, that's for hard red winter wheat for spring. Interesting that spring wheat is also down. So if they're not planting spring wheat up to the north, what are they going to plant? So it's look at soybeans and some other crops, probably beans right now. One thing we will have for our hard red winter wheat acres, given the high price that we're getting, really wheat's kind of an all-star in this thing right now. Probably a lot less graze out, a lot less abandonment. I don't know that many people are who right now is taking a look at that wheat field and thinking, I'm gonna spray or just that thing up and put corn into it. Just not in the motivations at the moment. Estimated 2020 production ending stocks, if we have good yields. 2020 wheat production 1.85 billion bushels. Ending stocks projected to be lower. We had been around 1 billion bushels, and even this year's projection 980 million bushels. The way the supply demand balance sheets have been working, 700 800 million bushels. So stocks to use moving tighter, 36% if that comes about. Season average price, USDA came out 490. If we really get 32 to 36% stocks to use, if that really happens, historically, that's been a price over $5. So and I'm just going by the book, 32, 36%, the adjustments for how demand could shift around, etc. So 535 is what fits if we really get those numbers down there, and that's higher than where we're at right now. Here's the supply demand balance sheet for wheat. Feed residual, exports, both adjusted lower. Ending stocks up 30. So ending stocks were up 30. And oh yeah, by the way, and then stocks to use jumped from 43 to 45% for this current marketing year. Market average price up 5%. Oh yeah, by the way, with stocks up and stocks to use up, yeah, well, we rallied 14 cents on the market yesterday, which means the market looked at this and said, oh, that's nice. What about this freeze? So there you go. You kind of see where the market's attention is. You can look at how for wheat. If you remember that corn chart, diving off, especially last bit of time. Well, this is if you invert those last 2 or 3 weeks, that's what this looks like from corn. Take corn, flip it around. There's wheat. Just the opposite. Strong food demand coming into play. And there's another factor at the end of this I want to mention on wheat. Great Bend, we do have a good price series a good basis series, and pretty strong wheat basis levels, really tied for where we were last year for wheat. There's some areas where we're running, as I recall here, looking at them of late, even stronger basis levels for wheat. So futures can be up and down, jumping around. It looks like that the futures were doing the run up for wheat as opposed to the basis having to do it, having to provide the underlying support as we were seeing in the corn market up until all this happened. And prices, it's interesting to see, to me anyway, to see eastern Kansas and central Kansas prices. Again, there's Topeka at 487. You do have Hutchinson, Wichita at 485, and Salina at 487. So to the east, pretty strong bids, and you know those are not there. I don't see any 40-cent under bids for basis there. So there's underlying strength and demand for wheat in eastern Kansas. Now you go out to western Kansas, take the eastern bids and add transportation to them. There's the western ones, and you know but even they're not terrible. They're not at loan rate or anything like that. Again, Colby 446, Garden 449, Ulysses, Syracuse 457. Just interesting to see what's happened for wheat. And for wheat exports, we have the combination of this domestic issue and some worries about what other countries are doing. And so when we look at all wheat exports, I already got bearish short term in terms of what's happened this last week, neutral. When you look at where we're at, we've got 8 weeks left in the marketing year. For overall, we're 92% either shipped or bought, and we were 80 in terms of the USDA's projection, and then you're 84.6 of the way through the marketing year. And actually, when I look at that, I think I need to adjust that. I've got that at 1 billion bushels, and now it's 985. They've adjusted that down. I need to go change that in my stuff. But so actually, those percentages look even better than I've got them there. My mistake. Sorry about that. Hard red numbers also had. You can see where we've about the same situation. What's happening in the world, and you've heard it today from Romania, you've heard from the Black Sea region, from Egypt, a buyer, from, again, let's say Black Sea, both Russia and Ukraine are talking about with the coronavirus affecting, it's driving buyers and sellers to build up bigger stockpiles. So in the short run, it helps us on sales. In the long run, you get a lot of people with stockpiles. So I hope I'm saying this right. If there's short-term strength, you'd have to watch out in the longer run for these worries to subside, and the big stockpiles just have to be whittled away. And so you've got some market psychology going on, but just like those U.S. consumers wanted bread off the shelves, the state run wheat or food ministries in those countries don't want to run short. So with what we've just had here, you probably have some more risk averse building up of stocks just to protect themselves from logistical problems that could happen in the market. And that's going to be a bigger issue when you talk about soybeans.